Hi traders, what's going on? Today I shall explain an NQ long setup from the 29th of June. I shall go from the bias for the day to the higher time frame key liquidity points, and I will drop down to the 1 minute chart and explain how the execution was. So, first of all, we start from the bias for the day, how I decided to go with the bullish trend. As you can see here, I am on the 4-hour time frame and I have this lineup marked here, which shows a break of structure was done. So that is telling me that the bias on the higher time frame is bullish, and that's how I decided my bias. Now, this movement here, this bullish movement, from that move I will mark some key liquidity points on the higher time frame, which right now we are on the 4-hour. As you can see here, I have already marked the 4-hour liquidity, in which I want price to go below and from there reverse. So on the 4-hour, that's the only liquidity I'm seeing. That's the one that mostly catches my eyes. That's the one. So after that, I will drop on the 1-hour time frame to see if there are more liquidity points that I need to mark. So here we are on the 1-hour time frame. At that time I have marked these two liquidity points, in which this one here, it's not that of a powerful liquidity point. I prefer this one, which is below it. Why? Because it is the start of the bullish movement, so it's more powerful. But I will still mark that liquidity point because you can never know what price can offer at that time. So I will just leave them both there, and I'll go and wait for price to go below this 4-hour liquidity point here. As you can see, price goes below this liquidity point, makes some inner break of structures here, 1, 2, 3, 4, 5. So price made inner break of structures. It made 2. So let's mark them up. Break of structure, break of structure. So now I know that on the higher time frame, on the 1-hour, price is still bullish. It is still ticking out my boxes for me to take the long setup. Now I shall talk about this price movement here, this bullish price movement here. As you can see, on the 1-hour we have like a, let's say it, a consolidation to the upside. I will mark from that consolidation on the 1-hour the key liquidity point, in which from there the most that catches my eye is this one here, which I will name 1-hour. So when price goes below that 1-hour that I have marked, I will wait to see how it falls, and then I will take the long entry. So let's drop to the 1 minute. Now I just want to say that I have several types of entry strategies, but for today's video, as I am showing this setup on the 29th, I shall show you one of my setups, which is very simple. As you can see here, price makes a bearish movement and goes down below the 1-hour liquidity that I have marked earlier. Now, when I see price action like this, my mind tells me that price needs to fill back that price action, because the movement is really made of high volume bearish candles. So my entry is like this. When I saw that price took the 1 hour liquidity and left an IFVG open here, in which I will mark an IFVG open here, let me label it IFVG, an IFVG open there, it went below the liquidity that I have marked, made a pin bar, then price went into the IFVG and then made a bearish candle. Afterwards price started to go higher. This small price action here showed me that price doesn't want to go lower. So that movement there, and after it made this bullish move, when the IFVG was filled at that time with this pin bar here, or hammer, call it as you want, the long setup was executed. It is a very simple setup. The entry was here at the IFVG top. The stop loss was made, of course, at the pin bar low, wick low, and the take profit was made at the highest point of the bearish movement, which gave us a 4-hour trade. It's a very simple setup. You need to first let the bearish movement, see the bearish movement being done, the IFVG, a pin bar showing that price wants to go higher, price will reverse, and this small section here that is showing us that price doesn't want to go lower, and as the IFVG gets filled, that is your entry setup. If you are scared to take that entry setup, it gave you another chance right here. Price went above the IFVG. It then retraced, made this bearish candle here, and then again a bullish candle. And that bullish candle signals to us that the price will go higher. And that could have been another entry to take with the same stop loss and the same as take profit. And as you can see, price from there kept going higher. If one could have left the trade open, he would have gained 5R. So for today's video, that's all. Just a quick recap. First, we decide the bias for the day. We mark key liquidity points on the higher time frame, the 4-hour and the 1 hour, and from there the only thing we need to do is to wait for price to go below the liquidity we have marked, and then we drop on the 1 minute time frame and we wait for the setup to form, in which I have explained few seconds ago. That's one of the few setups that I have, that I will be explaining in further videos. So for today, that's all. I hope that you liked and learned something from the video. If so, please leave a like and a comment, and I'll see you on the next one.